Welcome to this tutorial. If you're running a business in Canada, staying on top of your sales tax obligations is key to keeping your finances in order. In this video, we'll guide you through how to record, validate, and file your sales taxes using a practical example, so you can feel confident when it's time to submit your reports. Before we dive in, it's important to verify whether your business is required to register for sales taxes. Some businesses must register and collect sales taxes from their very first sale, while others, such as those selling only exempt supplies, aren't eligible to register. Also, keep in mind the Small Supplier Rule. If your business earns less than $30,000 in taxable sales over 4 consecutive quarters, registration may not be mandatory, but can still be beneficial. If you're unsure, feel free to contact T2TaxPro and schedule a consultation with one of our tax specialists. To follow along, open your Excel file and go to the Sales Tax tab. First, identify your province's sales tax structure and determine which sales tax accounts to use in the Transactions tab. Canada has 4 main setups. Quebec uses GST and QST. Some provinces use Harmonized Sales Tax, HST. Others apply a separate provincial sales tax, PST, alongside the 5% GST. And some provinces and territories only apply the GST. Update your reporting date based on your company's filing frequency, monthly, quarterly, or annually. The Excel file is currently set up for quarterly reporting, with Q1 starting in January and Q4 ending in December each year. If you modify the dates in the Sales Tax tab, make sure the date format matches the required structure in your spreadsheet to ensure accurate calculations. Sales taxes are calculated automatically based on the dates and accounts entered in the Transactions tab. To ensure accuracy, every transaction line must include a correctly formatted date. Use drop-down menus to select account names. Record collected taxes as credits and paid taxes as debits. Before filing, validate your entries using 2 tools. Transactions tab. Filter column D to show only tax accounts like GST payable or QST input tax credit. Ledger tab. Click on the relevant tax accounts to review totals and ensure everything matches. Let's walk through a simple example for a Quebec business to see how sales taxes are recorded. Imagine a business makes a taxable sale of $10,000. On that sale, it collects $500 in GST, which is recorded as a credit to the GST payable account. It also collects $997.50 in QST, credited to the QST payable account. The total amount received, $11,497.50, is deposited into the company's bank account as a debit. Now, let's look at a taxable purchase. The business buys a vehicle for $3,000 plus taxes. Here's how that gets recorded. The $3,000 goes to the vehicle asset account. The $150 in GST paid is recorded as a debit to the GST input tax credit account. The $299.25 in QST paid is debited to the QST input tax credit account. The total amount paid, $3,449.25, is recorded as a credit to the company bank account. After entering your transactions, always check the balance to ensure it shows $0. Let's now explore how these transactions appear in the Sales Tax tab for the January to March 2025 reporting period. GST collected, $500. GST paid, $150. The business therefore owes a net amount of $350 in GST. QST collected, $997.50. QST paid, $299.25. The business therefore owes a net amount of $698.25 in QST. Since Revenue Quebec administers both taxes in Quebec, the total payment is $1,048.25. You can also explore how these transactions appear in the business balance sheet by first refreshing the trial balance. Click on Pivot Table and refresh. Paid taxes appear under current assets, while collected taxes are recorded under current liabilities. Before submitting your tax reports to the authorities, it's important to verify the accuracy of your sales tax accounts. This review is especially helpful when multiple transactions affect your sales tax accounts. It ensures that all tax amounts are properly recorded. Input credits are accurately claimed. You're fully prepared before filing with tax authorities. Let's walk through the key entries in the ledger for the January to March 2025 reporting period. We start by reviewing the GST collected on sales. In this example, we see $500 collected on the $10,000 sale. This amount is recorded under the GST payable account. Next, we examine the GST paid on eligible purchases. Here, we see the $150 paid on a vehicle purchase, which is recorded under GST input tax credits. Now, let's look at the QST collected. We see the $997.50 collected on the same $10,000 sale, recorded under QST payable. Finally, we review the QST paid on purchases. In this case, $299.25 was paid on the vehicle purchase, and it's recorded under QST input tax credits. Once validated, log into your CRA account or Revenue Quebec My Account for Businesses to file your report. If you're filing QST, check out the helpful Revenue Quebec YouTube tutorial. Declare the GST, the HST, and the QST online with My Account for Businesses. Next, let's enter the payment of those sales taxes directly into the Transactions tab. On April 1st, the business pays its taxes. Bank account, credit $1,048.25. GST payable, debit $500. GST input tax credit, credit $150. QST payable, debit $997.50. QST input tax credit, credit $299.25. After entering your transactions, always check the balance to ensure it shows $0. Refresh your pivot table in the Trial Balance tab and confirm that the sales tax accounts show zero balances on the balance sheet, assuming no other sales or expenses were recorded during the period. In our case, since the business did not record any additional sales or purchases, the $0 balances in the sales tax accounts are accurate and expected. You now have the foundation to confidently record, validate, and file your sales taxes, whether you're dealing with GST, QST, HST, or PST. If this walkthrough helped clarify things, feel free to subscribe, drop a comment, or share it with fellow entrepreneurs who could use a hand with their tax filings. Thanks for watching, and I'll see you in the next chapter of your business journey.